Right now, my high-end target on Bitcoin is around the 12 to 13,000 level, which would put us right down here at this pivot. Right now, we're still hovering around that 2017 all-time high before the last bear market. But I do think eventually it gets pushed below this level and collapses down to, again, 12 to 13,000. I know a lot of people have heard the headline of, like, Gareth says it could go as low as 3,500. That's kind of a worst case scenario for me, where if we really see, the financial markets collapse, we know that Bitcoin kind of follows the financial markets. It hasn't become a kind of a goldish type thing yet. Then you could be looking at a $3,500 target. Long term, I love Bitcoin. I think there's a huge place in the economy, in the global economy for it.
Hello, and welcome to Wealthy Value. In today's video, Chief Market Analyst at InTheMoneyStocks.com, Gareth Soloway, shares his updated outlook on the global economy, including crypto, stocks, and bonds, along with his take on the inflation situation. Gareth also explains the concept of a multi-year bear market and how to interpret the market sentiment for profit. Make sure to stick around till the end of this video, where Gareth Soloway reveals the upcoming 95% correction in Bitcoin and how severe this bear market is going to be. If you liked the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
I think it is because it creates this fear and panic in the investing public, which then reacts, right? So it's going to that psychology of an investor. But the beautiful thing about it is the charts are amazing in that they tell you when the changes are going to come. And in fact, if you would, so let me show like my dollar chart here, my Dixie chart. Take a look at this, guys. So like the dollar had this big fall today, but look at where it was. Like the chart was telling you, like, look at this trend line, pivot high from early 2022 to this high and to this high. And so really it told you something was going to happen. And another chart that's just fascinating is the British pound versus the US dollar. And like, this is where we know that the Bank of England intervened by saying that they were going to start buying bonds again. But what's amazing is the chart almost told you something like this was going to happen. And this is what I always say, is that the charts tell you news is going to come out or something's going to affect the price of something. You just don't know what it is. Like, I didn't know the Bank of England was going to intervene. I just knew that, look at this. It was from 1985, the British pound was hitting the double bottom. And so the beauty of the chart is it's telling you something is likely going to happen, and then miraculously the Bank of England intervenes, and then you have this bounce that goes on, and the stock market here in the US really ripped up today as well. We saw some gains in crypto as well. And this is one of the things I pay attention to. I do follow Twitter, not because I think it's a great asset for me to trade off of, but in fact, it's a great asset for me to use as a contrarian indicator. And the key to a good investor is being able to figure out when it's at these kind of maximum megaphone periods where it's just overwhelmingly biased in one direction. And then that's usually the inflection point.
What else do you use for that? A fear and greed index or something else?
Yeah, so the fear and greed index is okay. It does give you a general sense, but I haven't found it to be a great for like exact reversals. I would tell you another thing to look for is, like, I'll tune into the financial media, and the financial media, like, you'll have on, CNBC here in the US, and they'll be talking all bearishly and all this and that, and like, oh, this is so scary. And you can almost gauge from that when it's really powerful that they are in one direction, that it's about to reverse. It's honestly taken me even longer than becoming a profitable trader, longer to kind of get my timing down to be more accurate. Because I would say it's one thing to be able to look and say, oh, there's going to be this big move in the markets, like, oh, the stock market is going to top out. Well, people thought that years ago, and then we've seen that reversal back down finally. But it's that timing, and it is honestly very hard because an individual investor is going to also have these emotional kind of fears in them. And it's a matter of you getting that under control as a trader and being able to be very much robotic, where then you get to a point where you can start analyzing and it's almost something that comes over time, where when you go through enough bull and bear periods in different markets, you start to notice, well, this is a lot of people saying it's bullish, but it's not to that crazy level yet. I do think that we are headed into a global recession, But remember that recessions don't, the markets don't trade in a straight line. So you're going to get to these technical levels where people get overly bearish, and then you get these technical bounces, like for instance, when the Bank of England does something like this. And then what you'll see is people start to sway and start to get bullish again. And then as soon as they start getting bullish in a bear market, you have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower. I'm kind of isolating down, and I can show my S&P chart here.
Sure.
SPX. There's a pivot point that I'm watching. So number one, notice where we bounced today. We bounced right at the lows from June. So a technical support level right there. I think this is a short-lived bounce. You might get a week, week and a half, 2 weeks out of it. But ultimately, we have to go retest the pre-COVID collapse highs right here. So that's down around 3370 on the S&P 500. And that makes a lot of sense, right? If you think about the Federal Reserve sucking all this liquidity out of the market, it makes sense that we have to go back to the pre-period before all this liquidity was put into the market. So that would be my next stopping point. I think by year end we get there.
And that is your fundamentals coming into the market. Just to add that in, because we often talk just about technicals, but that's basically a fundamental piece.
Right, that is true. That is true. Just sucking out that fundamental money that was printed. I also think, at a basis, I'm going to be looking to buy this level right here, just because it is such a psychologically technical level right there. So there'll be a bounce off of that. But again, I'm in the camp where you're going to have 2 cycles to this bear market. The first cycle we're in right now, which is a cycle where the Fed is tightening, there's no more money printing, and so valuations have to come down. The second cycle is going to be after the Fed pivots, right? So the Fed is going to eventually pivot. We saw kind of the Bank of England already do that, right? So at that point, you're going to see a big bounce in the market because the Fed is pivoted. Everyone's going to say, oh, they're going back to easy money policy. I don't agree with that. I think the pivot is basically just not hiking rates anymore. And the next cycle is going to be when the economy slips into a recession, and that without Fed printing of money, if you think back to every past big market drop, whether it's a recession or it was COVID or whatever, the Fed has been printing us out. And so with inflation still staying above 4%, I have a long-term horizon of like multiple years where inflation is going to be 4% or so. The Fed cannot print us out of the next recession, and the market is eventually going to realize that. And that's going to be a big earth-shattering factor for the overall market, where they're like, wait a minute, how does the economy get out of this recession without the help of the Fed? And that's where you see that next leg down, where people say, okay, now we could be in a recession for years. I mean, it could be a multi-year recession, not just a 6 or 12-month recession period. Okay, so right now, crypto getting a little bit of a bid as the dollar has fallen. Per the chart, we're in this bigger wedge pattern. So again, if I zoom out, this is pretty remarkable wedge pattern where you basically had the all-time high down sloping trend line. If we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside.
So, what are your thoughts about Gareth's perspective on a bear market and Bitcoin correction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.